Hey guys, Jay here. Welcome, smarthelping.com. Got another financial model template. It's been a little while since I've uploaded one. I really took my time on this. We are looking at data as a service. It is part of the as a service financial models bundle I have. You can also buy it individually, download it in the link description box below. Really comprehensive template. The revenue assumptions are what we're going to spend a lot of time going through. A lot of variable costs. This model was built for scaling, dynamic scaling based on customers. We're using really good retention logic. We're also having one-time data sales. So just in general, data as a service company is a company where you have valuable data and you're selling that access to that data. So your main costs are, servers, infrastructure, or hosting. If you're, say hosting all your storage on Amazon Web Services or something, or you could buy your own storage and infrastructure, bandwidth, um, your data transfer costs, mainly egress, not much. That's you transferring data out of the system to customers, and we've got all kinds of different revenue stream options. We'll go through it all. Let's start right at the beginning though. So what I'll do is go through each tab of the template and explain how it works. We do have integrated three-statement financial modeling. We have discounted cash flow, option for cap table, and executive summary, visuals, monthly and annual pro forma detail. So we'll go through everything. First tab, global control. This is where you just do the high level inputs, company name, launch year, never change the launch date. You'll have dynamic assumptions throughout the whole model to adjust when certain things start. But this date here is just for the financial statements, just so we can have fiscal year. So don't change the launch date. You can change the launch year and then everything will update on that, but don't change this one here. A lot of people have had problems with that. So just if you avoid that, you will be fine. Exit end month, so you can go any month up to 6 years out in time and choose your exit. And you can choose if you want to include a terminal value in that or not. Simple selector, yes or no. If you do, it'll be a multiple of trailing 12-month revenue. Cash sources. Now this is mainly going to be on the cap table, but you can put your debt if you want to fund anything with debt here. Traditional loan. The rest of the startup costs and any burn will come from uh, investors, owner or investor equity, which you will define over here on the cap table just by entering the amounts. You just need to make sure this minimum required is totaling up between these two columns, and make sure the percentages here plus this all equals 100% when you add the two together. Uh, then we've got some taxes here, insanity checks, and evaluation matrix. So let's go to the revenue assumptions. Here's where you're really getting into the model. So the first things first is I've got up to 6 acquisition channels. What this means is, so as a data as a service company, you're going to have to gain customers over time, and those customers are going to pay you based on a couple different options. And so I've got 2 different ways you can acquire customers, and that's through 6 cost per acquisition, so paid acquisition channels, which you can define the start month of each channel, the monthly spend, which you can adjust each year. But this is the spend per month, the cost per customer acquisition on average, and then that will define how many new customers you sign up over on the monthly detail in this section here. The other way you can acquire customers is through organic traffic. So this is just a starting organic traffic count, the percentage growth of that traffic, and then the conversion of that traffic to customers, which is adjustable over time. So this top part is just, okay, I'm acquiring customers. Now, these customers can have a couple different ways that they're going to generate revenue for you. And so we have the first option, which is subscription. So you can define a percentage of your customers that go to each customer type. And even if you're not doing subscriptions, if you're doing like pay per API call or pay per data accessed or gigabyte requested, you still want to make sure you're filling out the percentage of customers signing up to each tier, because those customers, even though they're not, if you select to zero out the subscription pricing, that's fine, but they still will have, they need to populate so you can figure out how much those customers are doing in API calls or data access. So the main thing here, we got monthly subscription. Now with the subscription pricing here, you can do some promotional details for each tier, such as the percentage paid in month 1, 2. This is just to account for things like, first month free or something like that. So they sign on, maybe they get their first month free, second month half off, etc. And then this is month 7 over, what they will pay as a percentage of the base subscription pricing here over the life of the customer. You've also got retention of these customers, which will affect all pricing or revenue streams. So here you can just do it dynamically. And what this says is, okay, let's say I sign up 100 customers in month 1. How many of those customers are left in month 2 and 3 and 4, etc. And that's how we define how, and sorry, these aren't months, these are renewal periods. So if it is just month to month, you just put 1 for each of these contract lengths right here in the revenue stream section. Contract length, you could put 1, or if when a customer signs on for tier type 2 customers, maybe they renew every 12 months, that's fine. You could do that here. Just know that when you put in your retention, this is for each renewal period. So like type 2, it's a 12-month contract. So I'm saying, 100% for year 1, and then after 12 months, the first renewal, there's 80% left, third renewal, 30% left, fourth renewal, 15, etc. So you can configure that all the way up to, 72-month contracts. That will apply dynamically to each cohort of customers that joined over time. So this is the most important thing this is the most advanced and accurate way to forecast recurring customers over time that have some kind of retention curve. Now you could do a linear curve, an exponential decay, and again, it's based on the renewals, so you can adjust contract length here, and it could be 1 month, 6 month, 3 month, 18-month contracts. It doesn't matter, any contract length that applies to your business. And then these are just some summaries that we'll pull to figure out how to calculate how many customers are left over on the matrix tabs, which these T1 through 6 are how all the magic happens. Okay, so we have customers, they sign up for our platform and they could potentially pay us a monthly fee or not. They also can potentially have API calls. So this section says, okay, for type 1 through 6 customers, what's their average API call requests per month? So you can configure that, and then you could just adjust the price you're charging per API call. So that's one monetization option. And that will just apply to the amount of remaining customers each month for each tier, times the API calls, times the price. And that's how you're getting revenue for API calls. Now, you might have, so you could not have membership pricing. You could zero this out, but you still then are just charging based on the customers left for API calls. You could also you could zero this out and just have average gigabyte requests per customer type per month, or sorry, per request, the average request per month per customer, and then the price you're charging per gigabyte accessed. So then this math is just saying, okay, however many customers I have at the end of the month times the request per customer per month times the average gigabytes per request. That gives me the total gigabytes requested in a given month, and then times the price per gigabyte. And that can vary. Maybe higher volume customers, you'll charge less per gigabyte and charge more for lower volume. And the same goes for the API calls. If you have a customer doing a lot of API calls, maybe you'll give them a little discount for the volume. So you can adjust all that here. So those are the first 3 revenue streams, and we can see on the monthly detail, here's the customers being acquired, here's the subscription pricing for the 6 tiers, here's the API request revenue, Here's the data usage revenue, which again, you might use one or the other, or both, or all three, or just one. It's up to you. The model can handle anything. You just zero out the assumptions that you are not using, simply by entering a zero. Like if I did that, you can see now the pay per GB is all zeroed out. Let me undo that. Okay, so we have those three revenue streams: subscription, pay per API request, pay per gigabyte accessed. You can also set it up, or maybe you have a separate data room or something where you charge a one-time fee for a data download. So this is if you have some pretty valuable data and you want to say, I'm going to sell that over time. So this could be, your sales per month, the sales growth over time, the price you're charging per download, and then the gigabytes downloaded per sale, and then the start month of each of these revenue streams. So this is a little bit different than the API access, which is more for volume data access. This is saying, maybe you have a lot of data from whatever businesses you're running, and it's very valuable to certain companies, and you want to monetize that data, so you package it up and you say, okay, you can come in and just purchase it for a one-time fee of whatever you want to put, which you'd put here in column J, and then you can just define how many of those data packages you're selling over time. Okay, so that's the main ways that you can earn revenue, and that one-time fee revenue is going to be right here. You see how many GBs are transferred for each one, because we're going to have a cost there for egress and the sales revenue on those one-time data sales. Next up, cost of goods sold. So we'll go into this first before I get into the fixed cost, because it's more the cost of goods sold is a little bit more complicated. So we have one option where you can just simply define the cost per month per customer as a one-time amount, or an amount that just applies to the customers that exist at the end of each month. This is a bit high level. You can break that down here in this section. There's 20 slots to break down the variable cost per customer per month based on each customer type, and you could put up to, configure up to 20 costs that make up this amount right here. This is just summing up the total of each of these columns for each pricing tier or each customer tier. So that's one cost of goods sold option. The other option, and then you have these are just fixed costs that might be servers or renting or something you want to manually define. You can put that here, and you can do up to 7 types configurations, but this is not scaling or dynamic. It's just a fixed cost of goods sold. They're kind of for filler if you can't find another way to enter your costs. Now, let's get into the API call cost of goods sold. So here we're saying, okay, your customers are doing a certain amount of API calls per month, and what is it costing you per API call? Now this could be logic, and the reason why this is different than the other, charging based on a per gigabyte basis is the API calls could have different computational logic that has different costs. So you're trying to package it up and say, okay, for the API calls we're offering to this customer group, they're doing 500 on average a month, and we're charging them 8 cents. So we want to make sure to facilitate that it's costing us less than 8 cents per API call. So whatever that cost is, you're going to put in here, and you can adjust it over time as well. But this is the cost per API call. Now, if you want to instead price it by gigabytes sold, we can see here you can price it by gigabytes accessed per month, whatever that amount is. And then on the expense assumptions, you could put what's your cost per gigabyte transferred per customer type. So here we're saying every time you transfer data to a customer, or they access and download the data, it's going to cost you some amount in egress. And this is where you can populate the amount of that cost. And on the monthly detail, you can see here's the API costs, here's the data transfer costs. So here we're looking at 870,000 GBs accessed for type 6. Those 870,000 GBs accessed is costing you 0.000 or 0.0005 cents. So we're just multiplying that amount times 870,000 to get our $435 in that case for that month. So the other costs we still have one-time data sales. So here we're saying, okay, every time we make a sale of this, like these one-time sales for these, 15,000 GB download, 20,000 GB download, based on the amount of sales per month, what is it costing us to transfer out for each sale? Or not, sorry, for each sale, for each GB, because we're breaking this down into one-time sales here for cost of goods sold is doing the total gigabytes transferred for one-time sales, so 165,000, 389, etc., times the cost per GB. So it's not a cost per every time the sale, is a cost per GB in these cost per GB gigabyte. And just a quick note, if you wanted to put these in different terms, like in terms of megabytes or terabytes, you could just change the text and then just make sure your pricing makes sense for whatever unit of measure you're doing this based on. And then it'll be fine. So it's not a problem to change and not denominate in GB. You could denominate in any unit metric you want, unit measure. Another one we have is data generation. So this is two things. Number one, is it costing you anything to acquire your data here? So starting amount of gigs, the growth of that over time, and then the cost per GB of data generated. So now we're trying to figure out, okay, is what ongoing costs are associated with continually building the data product that you're selling. And then for every gigabyte added, we just multiply that times the cost per gigabyte of data acquired or generated. Here we're just saying $1. So for every GB added, it's $1. So here we're added $500. We added 525, $525. Okay, so there's that cost. We also have GBs stored at different performance levels. So this is the data you're selling. And remember, this is scaling based on, you've got this data here, you're monetizing it through all these different, API logic access or data transfer access, just to sending GBs out of data, or one-time access of this data. So you have three options for the pricing, or sorry, for the performance. You could have fast storage, slow storage, or other type. I just did three types. You could define the percentage of data that you have that you're selling that falls into each storage type, and define what that cost is per megabyte, or sorry, per gigabyte per month. So total gigabytes stored times this, and this is going to be pretty cheap. Well, I guess depending on how much you have. You could use Amazon, or you could have your own storage. If you have your own storage hardware, you would go into the CapEx here, and this goes same for servers or other infrastructure. You can put those costs right here, whatever they may be and when they happen. Pick the month of expenditure by selecting through the drop down, and then the total cost basis. And that will populate as well as a cost of goods sold right here, which is the total depreciation of those items over time, is your cost of goods sold for those. Okay, so then we have our total cost of goods sold. So that's, non-cash cost of goods sold items, CapEx, cost to store the data that we're selling, cost to generate the data, transfer data costs, API costs, other cost of goods sold, other costs based on a per customer basis. And this is very dynamic. We're trying to hit every possible area of this business so that it's very flexible and usable for a lot of different types of data as a service companies. Um, oh, and I want to say one thing with the data acquisition cost. You might be purchasing data, acquiring it, and then, like for example, in this case, you might be spending $3 million to buy data that you're then selling for these one-time data sales. So that could be the source of that cost of goods sold could be this, like an item like that, and it's again it goes to the depreciation, and you would still want to then make sure your ongoing GBs and how much you're having to store in data matches up with that over time. And again, data added per month is here. Total data stored is here. If you wanted to, this customer added for each tier is going just on the logic in the revenue assumptions, um, based on the percentage added in this acquisition. If you wanted to, you can manually define these and override the formulas. It won't break anything if you want to manually define how many customers you're adding for each tier over time, or if you just want to manually define how many new customers you're adding over time. This is the total. This would be your total paid acquisition. This would be your total organic acquisition. So you can manually define those if you don't want to go off the revenue assumption configurations right here. And that's fine as well. If you want to get down into the detailed granularity level of every month and just manually define these, that's fine. All this will flow off of that perfectly fine if you want to do it that way. All right, we've got revenue, expense. Now these fixed costs up here are for like corporate overheads, software developers, sales and marketing staff, things like that. And you just define the monthly cost adjustable by year at the start month of each of these, selected with the drop down. If it's a salary item, put a 1 in over here. You've also got your payroll tax and benefits percentage right here. So those are able to be accounted for. Startup costs, just one-time costs at the beginning, maybe a reserve as well. If you want to have a buffer on the money you're raising, this would be where you enter that. Debt schedule, just amortization schedule. You can enter the terms here for however much debt you're going to fund. Again, on global control, you can see this is 24.4 million required. If I were to zero out the debt, that goes up a little bit more to 24.5, based on this. So anything you don't fund with debt is going to come from equity. CapEx, we kind of went over this. These are any one-time costs. All cost of goods sold here, except for item row 3, which is like if you want to buy your own office building or any non-cost goods sold item, you can put the cost basis here, useful life, month that expenditure happens, and then any value at exit manually. The rest of these, everything auto-populates based on you adjusting the cells in yellow. And again, you'll adjust only cells in yellow throughout the whole model. Cap table we went over, you can define of this, in this case, 24.4 million minimum equity required, how much is coming from different investors, how much is coming from owners. This is overflow. Now, if you want to overflow, if you want to just have this go to the owners, you can just hit the copy here, paste values. Now you can see that it zeroes out because this formula is just taking the minimum equity against the total raised in all other sources to get the remaining amount of the overflow. And then make sure you're entering the percentage here next to each one, the percentage of profits they're getting. And again, the total of this column plus the total of this column should total up to 100%. And then the total equity raised in this column and this column should always add up to this total here. And then you've got some IRR calculations based on the contributions and distributions of each investor or owner. Terminal value, this is just a tax thing. If on the exit you want to assume some of this is going towards your infrastructure or overhead, you can put like 95 here. let's say there's still a little bit of a useful life left on one of these, it'll have some of that go towards these, and then it'll just be a small change in the amount of taxes. If you're not showing taxes, then it's irrelevant. If you're going to zero these out, it won't matter. Or you just put this to 100%, and then nothing's going to flow to these. Income statement. So we have here the high level revenue items, subscription revenue, API request, data transfer, one-time data sales. You've got your cost of goods sold for each one, gross profit, operating expenses, EBITDA. And remember on EBITDA, we got to add back the depreciation because this item is depreciable. It's a non-cash depreciation expense. So we're adding that back there. And then it's actually, this is where the expense happens that we're adding back. So we do want to count it there to figure out our taxable income. You've got this going all the way to our exit date. And then you've got that and the taxes on the sale. Income statement annual, same deal, but on an annual basis. And all these are connected. So you've got your balance sheet, cash position over time. You can see that's going to solve to go to 0 right there. This is the whole model solves for 0 cash position. So it'll tell you how much you need to never go below 0. So there's that. And note my assumptions here, I have a negative EBITDA. I'm just arbitrarily entering these. So you'll put this in all this data for your own situation to see what the unit economics look like. So balance sheet just has your assets, cash, fixed assets, accumulated depreciation, debt, equity, and assets always equal liabilities plus owner's equity. So there's your check. Balance sheet annual, same thing. Cash flow statement is kind of like your uses and sources. You can see what is affecting cash flow in each period. Operating, investing activities, financing activities, changing cash flow per period. Here's an annual look at it. Distributions, this is the discounted cash flow. So the project level cash flows are up here. Project level IRR and discounted cash flow analysis here. And then you've got the investor section and owner section based on the cap table percentages. And these are the high level. So this is just showing you the aggregate effect of the outside investors and the insiders. And you're seeing those in those 2 rows. You got a visual. We've also got an executive summary. So high level is showing, it's kind of like the income statement, but we're also showing other cash flow items and cash position, as well as IRR, ROI inputs here for the investor owner, for the project investors and owners. You've got also equity multiple. This is also known as the MOIC and then ROI. What else? So visuals, a lot of visuals. So we got annual revenue, gross profit, annual EBITDA, cumulative cash flow, annual expense summary, customer acquisition costs, customer acquisition cost versus lifetime value of a customer, lifetime value to CAC ratio, average monthly churn rate for subscription customers. Well, actually, this will be for all your customers besides one-time data purchasers. Customer count by type, all 6 types, annual subscription revenue by type, monthly cash flow, excluding the exit value, average monthly revenue gross profit per user, average life of a customer in months, months to pay back CAC, monthly API calls, annual revenue by type, ARR as of end month, which is just taking the MRR times 12. And again, this is calculated at the bottom of the monthly detail down here. And note we are taking out one-time sales in this calculation. Monthly GBs transferred. So a lot of nice metrics. Now in this monthly cash flow, we're excluding the exit, but also it's accounting the debt repayment. I'm assuming, let me just look at this real quick. So this minus the sale. Yeah, we should probably also exclude the taxes for that period because those are basically related. Those taxes are so high there because of the sale. So yeah, that's a better number. Let me just put update on this calculation there. Okay, so there's that. So now that visual makes a little bit more sense. So you're just excluding the effect of the exit. Now, in the monthly detail, we kind of went through this in bits and pieces, but it flows from top to bottom: customer acquisition, monthly subscription revenues, API revenues, data GB access revenues, one-time sales, data sales. Here's total revenue. Then you've got all your cost of goods sold, gross profit, fixed costs, research and development, sales and marketing, your advertising spend, total fixed costs, EBITDA, debt service, other cash flow items. Remember, we got to add back the depreciation because that's essentially coming out in these CapEx items. But we're counting the cost of goods sold as the depreciation expense of that, so we have to add that back here. Startup costs, cash flow, running cash position, and then all these advanced KPIs. Annual detail, same deal as the monthly, just on an annual basis. All right, and that is the model. So very good if you're trying to analyze your data as a service business, test pricing, look at the unit economics, look at scale, account for all relevant costs, revenues. We've got financial statements, CapEx, all of that stuff here. I think this is a really good simulation to go through and understand your business better or understand data as a service in general and plug in information as it changes or as is relevant to your situation. Now, if you want to get the template, links in the description box below, and I will have it listed here on smarthelping.com under SaaS. And I have in this tab has all the as a service business models. So I'll list it at the top of this subscription model section. It'll be included in the bundle for $289. I'm also going to list it here for a one-time fee of $125. And keep in mind, I've got over 150 financial model templates on the site, not just for SaaS, real estate, joint venture, cash flow distributions, a lot of industries: construction, equipment rental, oil and gas, auto repair, made-to-order manufacturing, coffee shop, all sorts of service businesses, plumbing, laundromat, sports agency, educational courses. A lot of different unique logic here. Very valuable to a lot of people, so check it out. You can buy everything I've ever built. Just check out on the home page this little image here. You can download all the templates I've ever built for a one-time fee of $9.99. Super valuable. Anybody in finance or looking to run businesses, this is a great resource to have. All right, that's all I got for you on this one. Like the video, subscribe, and I'm really going to try and do a lot more templates here to end the year out because I've been taking a break. So we'll see what else I can produce in the coming months. But I'm excited. Alrighty, guys, take it easy.